Hey everyone, how's it going? We're back again with the start of another trading week. So last week was very, especially on the close of last week with FOMC, we noticed the dollar showing very bearish trend. So the outlook going into this week will definitely be more biased to dollar moves to the outside. So just to kick off and not waste any more time, we can see the dollar after the news report. It gave us this very large bear candle right here. Note that this is a 4-hour time frame, so you have to kind of understand how influential that is. And basically, my outlook for the dollar for this week coming up will be to the downside. So from last week, I noted that the dollar could have potentially bounced off this support line right here. It could have went up, or it could have broke underneath. And what we see that actually formed here after the news report, we had a head and shoulder formation. So as you can see, this is a head and shoulder formation right here. And the outlook for me will be basically to get the dollar to swing all the way to the downside up until here. Possible supports it could find right here. But one key thing to note is do not rush and enter trades right now. It's Monday. And because this bear candle ended on Friday, the market never really had time to collect itself in the form of a correction. So this candle was so long with no other correction forming. It'll be very rare that the price will just shoot to the downside again, right? Most likely the price will correct in this manner. Also to form some sort of potential retest at this key zone. So we could look to see a head and shoulder formation forming, or we could look to see an ascending channel formation forming before price breaks to the downside. Now why this is so important to note is that before you rush to enter trades on other pairs because you see this big red candle on a dollar, just know that you need to be a little more patient, or at least let Monday complete to see whether the price will stay in this bearish pattern or whether the price will break above retest and then we are back into an uptrend. But for me, the sentiment is down. And because the sentiment is down on that pair, it means that Euro USD, I will be looking for long entries or buy positions. So Euro USD is also in a sort of uptrend, you can say, with an inverse head and shoulder. As we say, it just mirrors the dollar. Potential inverse head and shoulder to complete the movement to the upside. If you switch to a daily chart, you can actually see that price is in a sort of uptrend movement. So as you can see, we have a sort of uptrend movement right here. And because the dollar is looking to be bearish, I will be basing my Euro USD trades off that. US 30 from last week, the price did not go down, more instead it formed some sort of uptrend. And now the price is above this previous key zone. So from my other analysis, I will be looking for some sort of retest to continue this move to the upside. You can also see that we are supported by an sort of long uptrend as well. So as you can see, we have the support of this also uptrend movement. So look for a retest of this key zone before price continues to the upside. Gold is still in the wedge. Gold is still in the wedge formation, although that news report kind of did help it to give it some sort of bullish movement. And because the dollar is looking to be more bearish this week, I'm more favoring gold to break to the upside, although that may not happen. But as I said from last week, it is a ranging market. I don't really want to be in such a tight ranging market, so I'll wait for gold to break to the upside or break to the downside. Just touch on some JPY pairs from last week. So JPY, I'm still looking for CAD JPY as it has formed a bullish descending wedge. I'm looking for the price to break out of this wedge and then form some continuation to the upside. And that's all for today. Let's not rush. Let's wait for the dollar and other pairs to show its actual movement. Let's not worry about this candle. This is move is gonna, it's already finished. Let's wait for the correction and then wait for the breakout from that correction.